Today, our group represents monetary policy practiced by China to control inflation. Before we start, I want to introduce our group members. I am Jocelyn Suda, and on the second picture is Corinani, third is Emilia, and on the last picture is Felicia.
For introduction, I will explain about the monetary policy, inflation, and the roles of People's Banks of China. Monetary policy is known as an approach that is made by central bank or government authority to control the economy. Next is inflation. It is the increase of price in goods and services. China has a big inflation problem in which it has pushing up the worldwide price. Next is the People's Bank of China. It is one of the central bank in China. Its role is to regulate China's financial institutions, which include the commercial banks, and it also influences the interest rate, inflation, and all the stability of the country's financial system.
Next is monetary policy tools employed by China. What is reserve requirement ratio? Reserve requirement ratio (RRR) or cash reserve ratio (CRR) is the percentage of client deposit and other liquid assets that commercial banks need to hold either on their institution or with the central banks. The center sets the RRR to make sure the commercial banks have enough assets to pay the depositor if it's high withdrawals. In the other word, RRR is one of the key regulatory tools used by central banks so they can control the amount of funds and financial institutions. Next, key information about China Reserve Requirement Ratio. RRR has been set as 7.1% in October 2023. The data of China RRR that is reported by the PBOC has been updated monthly, which is available in Jan 1985 until October 2023. On March 2023, they reported that China's supply M2 increased to $40,503.4. However, on September 2023, foreign exchange reserve in China measured at $3,415.1. On September 2023, the foreign exchange reserve equaled 14.1 months of import. However, on August 2023, China domestic credit showed that they reached $43,727 by representing an increase of 10.3%. Last but not least, the country's non-performing loans ratio in June 2023 has stood at 1.6% compared to the ratios in the previous quarter. On March 2023, household debts of China has reached at 63.3% of the nominal country's GDP. On this slide, I will explain about targeted reserve requirement ratio of China. The PBC has created a tiered RRR system for depository institutions based on their size, systemic importance, type of institutions, and positionings of service. The first group consists of 6 large state-owned commercial banks, including the Industrial or Commercial Banks of China, the Agricultural Bank of China, the Bank of China, and the China Construction Bank, the Banks of Communications, and the Postal Savings Banks of China. However, the second group comprises medium-sized banks, which is including Joint Stocks Commercial Banks and City Commercial Bank. Since 2004, the PBC has been working with tiered RRR for depository institutions, which was formalized as the 3 tranches or 2 preferential treatments framework in 2019. The 3 tranches category depositories, financial institutions in China into 3 groups. Lastly, the third group. This third group includes small banks, in particular depositories, and leading institutions that operate in rural areas, such as Rural Commercial Bank, Rural Credit Cooperative, Rural Cooperative Banks, and Village Bank. Until 2021, 2 preferential treatment provide additional RRR cuts depending on a bank lending portfolio. Next, under the PBC tiered RRR framework. Each group of banks is assigned a different RRR. In the other words, smaller banks receive more support in their normal business as they are required to hold a lower quantities of reserve. The two prevention treatment granted an additional RRR cut of 0.5% and 1.5% for banks in the first and second strands, respectively. If their lending to exclusive finance segments met a certain lending ratio.
So I'm gonna explain about the open market operation or MO. Open market operation started to be available as a mean of exchange. In China, central banks commonly use open market operation to adjust the amount of bank reserve in circulation, which involve buying or selling assets as typically government debt. So the key elements of China's open market operations are repurchase or known as repos and reverse repos agreements. Through open market operation, in order to control inflation, China uses the repo rates or repurchase agreements. The meaning of repo rate or repurchase agreement is an interest rate where the central bank lends money to another commercial banks. In addition, commercial banks borrow from the central bank during funds scarcity, repaying it based on the repo rate, and these loans are given out in exchange of government bonds or treasury bills. So during an inflation in China, central bank will increase the repo rate to control price and for banks to borrow from the central bank. This eventually lowers the amount of money in the economy, which helps in preventing inflation or increasing the liquidity of banks.
Now I will explain about the exchange rate policies and inflation control in China. Since 21st July of 2005, China has reformed its exchange rate system to a managed floating system based on a basket of currencies. China is currently pushing for further reforms to increase exchange rate flexibility as part of its capital liberalization plan. Secondly, recent empirical studies by some Chinese scholars have drawn controversial conclusions about the impact of exchange rates on China's inflation. Ji Xiang, Yan Cheng, Li Ping, and Yuan Feng on 2011 used Granger causality test with monthly data from 2005 to 2010 and find that RMB appreciation increased domestic price levels. Furthermore, they conclude that China's domestic inflation was domestic problem rather than an import problem. China's success in controlling inflation was the result of two basic policies, which are the government placed top priority on adequate amounts of basic necessities to all and it designed institutions capable of maintaining sufficient supplies.
In conclusion, China has a complex monetary policy. However, from this report, we have learned the China strategic plan and its approaches to regulate the microeconomics variables in order to control the inflation by using the suitable tools. That is all for our group. Thanks for watching.